Breaking tonight, a policy move out of Ottawa is sending shockwaves through global markets, and beverage giants are scrambling to contain the fallout. Reports of a controversial new water extraction tax in Canada have triggered investor panic, with shares of major soft drink companies reacting sharply within hours. Is this the beginning of a global crackdown on corporate water use, or is Wall Street overreacting to political pressure? Tonight, we break down the explosive claims, the market chaos, and what this could mean for Coca-Cola, PepsiCo, and the future of bottled beverages worldwide. Stay with us, because the details behind this story could reshape the trillion-dollar beverage industry. In what insiders are calling a high-stakes environmental pivot, Canadian regulators are reportedly reviewing new rules that would dramatically increase fees on companies extracting groundwater for commercial use. Environmental groups have long argued that multinational beverage corporations pay pennies for millions of liters of fresh water, while local communities face rising shortages and climate-driven drought conditions. Now, lawmakers appear ready to act. Early reports suggest the proposed framework would significantly raise extraction costs, tighten licensing requirements, and introduce stricter sustainability audits for large bottling facilities operating across provinces. While no final legislation has officially passed, the mere possibility of aggressive reform was enough to rattle investors. Within minutes of the headlines surfacing, trading desks lit up. Analysts reported heavy sell-offs in beverage stocks amid fears that higher operational costs in Canada could compress profit margins and spark similar policy shifts in other countries. Market watchers say that when regulatory risk meets global brands, volatility follows fast and hard. Shares of beverage leaders fluctuated sharply during intraday trading as algorithmic systems responded to the breaking narrative. Financial strategists warn that if Canada sets a precedent, other governments facing water scarcity could follow with similar taxation models, amplifying cost pressures across North America and Europe. But here's the critical question: how much of this reaction is grounded in fact, and how much is fueled by speculation? Industry representatives argue that companies have already invested millions in water stewardship, recycling initiatives, and community restoration programs. Corporate spokespeople emphasize that water usage fees are only one component of a highly diversified global supply chain, and that operations can be adjusted if local regulations change. Meanwhile, environmental advocates counter that incremental reforms are no longer enough, pointing to studies linking industrial groundwater extraction to falling water tables in vulnerable regions. They insist that meaningful pricing reform is essential to protect long-term public resources. Political analysts suggest the timing of this debate is no accident. With climate concerns rising and voters demanding stronger sustainability commitments, policymakers may see tougher water policies as both environmentally responsible and politically strategic. However, critics warn that abrupt cost increases could impact local jobs, raise consumer prices, and strain cross-border trade relations. Economists caution that even a modest increase in extraction fees could ripple through supply chains, influencing everything from bottled water to soda pricing in supermarkets. If companies absorb the cost, profit margins shrink. If they pass it on, consumers feel it at checkout. Either way, the financial calculus changes dramatically. Some market experts believe the initial stock reaction may have been exaggerated, noting that Canada represents only a fraction of total global revenue for multinational beverage corporations. Others argue that symbolism matters more than scale, and that a policy shift in one G7 nation could signal a broader regulatory wave. As trading continues, investors are closely monitoring official statements from Canadian authorities to determine whether the proposal advances to formal legislation. For now, uncertainty remains the dominant force, and in financial markets, uncertainty can be more powerful than confirmed action. Size. So what happens next? If lawmakers move forward, corporations may accelerate investments in alternative sourcing, advanced filtration systems, and localized production models designed to minimize extraction costs. If the proposal stalls, markets could rebound just as quickly as they dipped. One thing is clear: water, once treated as an abundant commodity, is rapidly becoming a strategic asset in the global economy. As climate pressures intensify and sustainability standards tighten, industries built on natural resource access will face growing scrutiny. Tonight's developing story underscores a larger shift from unchecked resource extraction toward accountability and environmental pricing. Whether this becomes a landmark policy moment or a short-lived market scare will depend on the decisions made in the coming weeks. We will continue tracking every development, every policy update, and every market reaction as this story unfolds. For now, investors, policymakers, and consumers alike are watching closely, because when water policy meets Wall Street, the consequences can be swift, unpredictable, and far-reaching. Pause. Stay tuned for updates as we bring you the latest on this rapidly evolving situation.